All right, we'll get things going here. Appreciate everybody jumping in and taking some time out of everybody's busy days. Excited for today's webinar. I'm joined by Chad Barthel here, who is a new to our sales team here at IAMS, and also joined by Destany Hall over at Principal. We're going to go over some Principal's DI product, but going to tie into it Chad's personal story related to his personal experience on going through a disability income claim, kind of picking apart group insurance and how all of that works. But first off, as always, we're going to go do a little introduction here at IAMS for those of you that might be new to us here. So to kick things off here, we have our IAMS new producer builders. So this is for agents that are newly contracted with IAMS. It's a 180-day kind of time frame here when you first get contracted. You can see the various levels here from the $100,000 level all the way up to the $1 million level. The production that goes towards your new producer build list is all FIA and life insurance target premium and SPL premium. So pretty much anything you get full credit for minus MIGAs. So you can see here at the $100,000 entry level, once you hit that in your first 180 days, you can get an iPad, $750 cash. Then as you can see there on the screen, various different levels there from trips there at that $500,000 level, also some different marketing programs and too. So if you're new to us here at IAMS and want to see where you stand with your new producer bonus, reach out to your sales director. And the best way to do that is at 800-255-5055. Next, we have our business builders, which are our referred producers program and our marketing reimbursement program. So on the referred producers program, best way to say thank you to us is generally through a referral. So if you have any friends or colleagues that are in the industry that are not currently working with us at IAMS, they don't want to be technically part of a hierarchy or a team, we will pay you out essentially overrides on any business written through us. You can see the various levels that we'll pay out. We do pay these out quarterly, so we write hundreds of checks each month out to producers for their referred producer program. Excuse me. Next off, we have our marketing reimbursement program, which is fairly unique to the industry in the IMO space. So we'll pay you, you start accruing marketing dollars. So we'll pay $100 in marketing reimbursement per $100,000 of FIA premium. And there's a couple different factors there on SPL business and life target business though there. So on the life target, we'll pay you $200 per $10,000 of target premium that you pay for. Once again, we cut those hundreds of checks out each month and quarter for a marketing reimbursement program. If you have any questions, once again, on these programs, reach out to a sales director here at 800-255-5055. Next, we have our back office support. So this is what we really pride ourselves on as our customer service. We understand that you guys as independent agents are pretty much independent contractors. You guys get to choose who you work with. And when Charles founded the company 30 years ago, he felt there was a disconnect in the industry of people forgetting that and IMOs forgetting that. So we want to put you guys as the producer first. So we have obviously access to sales directors here on the life and annuity side. Our new business teams on the life and annuity side do a great job. They're touching cases every 3 to 5 days. With the sales directors, you'll have access to them to help out through any cases that you're working through, walk through our marketing programs to help you get in front of new prospects and clients. Also get access to our IAMS agent portal that you can have access to quoting engines, sales tools, a bunch of different stuff. So if you haven't had the opportunity to work with us yet, give us a shot here on your next case so we can prove our value and earn your business. Next, I pointed out here our IAMS website. If you are contracted with us, you have access to IAMSinc.com. So I pointed on it there. On the life insurance side, we'll have term quoter tools, final expense quoter tools, forms at your fingertips. On the annuity side, get access to Annuity Rate Watch and Luma, which is kind of the main hub there on the annuity side of things. So a bunch of good information there on that IAMS website. If you have any questions on that or have not gotten signed up, reach out to your sales director to walk you through the IAMS agent portal. Along with the agent portal, we have our EAP solutions. As we know, good, bad, or ugly, that pretty much all the carriers are going to EAP only, which in my eyes is a good thing. Let's get rid of paper if we can. It makes things so much easier, from reduces NIGOs. I know some carriers even will give a little bit higher comp, or they were at one point higher comp if you were using an EAP. So Luma and Firelight are generally going to be used on the annuity platform. We use iGo or iPipeline for pretty much all of our life and DI and long-term care policies. Sunfire is more going to be for our senior health and supplemental products there. So have any questions, run into any issues there, our team is here to help out navigating through Luma, Firelight, and iGo. Next, we have our creative services team, which I think sets us apart from other IMOs in the industry here. Jacob and his team do a great job if it's from digital solutions, agency solutions, their turnkey stuff, more brochures, flyers, newsletters. We'll customize anything that you have in mind from scratch. We also have a bunch of white labeled brochures and templates that we can use to throw your own agency or agent logo on it there. So reach out to a sales director, get you in contact with the creative services team. They do a great job, I know, on websites. They're also, either if it's a revamp or a fresh build, you can also use your marketing reimbursement dollars to go towards any creative services projects. So once again, reach out to a sales director here to get you in contact with the creative services team for any of your ongoing marketing projects. One thing that we've been really trying to push here to differentiate ourselves is our complementary marketing analysis. So either if you're new to us or if you've been working with us for 30 plus years, we'll have a complementary marketing analysis. So easiest way to explain this is have a conversation with a sales director. Think of it as a fact find. We're going to get to know your business, see where you're at, what your goals are here for the remainder of the year or looking into next year. We will review any websites that you currently have, what marketing programs that you're using to get in front of new clients, and give any suggestions there. So great way to kind of personalize and not just throw out any marketing recommendations, because as we know, not all marketing vendors and lead vendors work for everybody. So this will be tailored to your practice specifically. A couple more things here. We have, if you were not familiar, our IAMS Wealth Management team that was created back in 2016. So we saw the need as the DOL was going through all these changes back then. We saw the need to help out our advisors with that managed money solution. So Charles Jr. heads up that team. Kind of the keys here of why you should look at using IAMS Wealth, or if you have your 65, bringing your business over to IAMS Wealth. It can help you increase your revenue, improve client relationships. As we know, the more services that you can offer your clients and have in-house, more of that wallet share, less likely they are to leave. So if you have any questions there, reach out to Charles Jr. or Duncan there at IAMS Wealth Management. And finally, we have our Life and Annuity Academy. So we host 4 to 5 of these each year. It's a great way to spend some couple days on your business, usually 2 to 3 day events. A majority of those are held here at our home office here in Omaha. We have one upcoming here at the end of August that is unfortunately full, but we've just announced our next dates that will be the start of October. Going to be co-hosting those with North American and Athene. So it's a great way to, like I said, spend some time with some top producers from across the country, hear from a couple of different carriers, get some advanced sales ideas, marketing strategies. So if you have any questions on our next up and coming Life and Annuity Academy, I know we've sent out some email blasts, but get in contact with the marketer here. Once again, our phone number 800-255-5055. So with that, I'm going to hand it over to Chad. Like I said, Chad's a new team member here. Excited to have him on the team. He has a unique story. He's not new to the industry by any means, but Chad has a unique personal story that he's went through on DI claim. So I think it really drives home the fact that we need to be having conversations with our clients to protect their income, especially during their high earning years, and then how we can tie in principles, DI products to help solve these solutions for your clients.
Hey, thanks, John. I appreciate that. Again, my name is Chad Barthel. I'm a senior annuity rep here at IAMS, and while John and I focus on different products every day, we work on the same things and our goals are the same. So we work with advisors and their clients who are trying to do two things. They want to minimize or eliminate the downside um, of asset accumulation. They don't want to put their money at risk, and they want to maximize the upside potential. Of course, both life and annuity products do that, and they're fundamental to ensuring people have the money they need to live in retirement. Fundamental to that goal is the asset accumulation phase. So the target for what I'm talking about here is folks in their, late 40s, early 50s. They probably have a lot of money invested in their 401k, some savings, maybe a college fund, perhaps some assets under management. And the thing that is key and similar to people that are in this age group is they're entering the highest earning years of their career. Retirement is really starting to become a reality. So what happens if the bottom falls out? And I'll go further from there to say, challenge you, what does the bottom falling out look like? I think disability is such a misnamed product because it connotates images of paraplegia, wheelchairs, traumatic events that are real, but it's a lot more common than that. And so again, these people in that age group, father time starts to knock on the door. Aches and pains become real, disease diagnosis is there, lifestyle choices start to build up, recovery becomes slower. Bottom line, we age, we get hurt, we get sick. At this point, I probably haven't told you anything you don't already know. Shoot, you are probably experiencing it yourself. But what I'll tell you is that most of the high income earners that you're dealing with, in fact, anybody you're dealing with that works in a group environment or an employer environment, their plan for this might be built on a really shaky foundation. And Destiny is going to get to that here with her presentation coming in a bit, but I'll stop here for a second and tell you about my background. So I have 25 years in employee benefits work. I started with MetLife, I worked for Mutual of Omaha, and finished my employee benefits with United Healthcare. So these are heavyweights of the employee benefits field. I've worked with employer groups of 50 or more my entire career, and the focus was on building benefits that included health insurance, life insurance, disability plans. And I've sat in break rooms, boardrooms, I've dealt with 50 life employers, I've dealt with 3,000 life employers, building different plans based on different incomes, based on what the employer could afford, what employees could afford. And what I learned at that time, and then through a very, very personal experience, is two things. Most of the people that have group benefits coverage do not have a relationship with an independent financial advisor. The one time a year that they go into a break room and the HR director talks, and maybe a carrier rep comes in, and now in the world of online enrollment, shoot, they might not even see that. They believe that the group plan that they have as a function of their employment has them covered. They don't have somebody else to tell them anything else. They trust their employer, and they should. Employee benefits professionals do a good job. HR professionals do a good job. They do a good job. Secondly, the group disability plan they're covered by has three fundamental clauses that can make or break what happens to them if that bottom falls out. And remember, that bottom falling out can be just about anything. And here's where I'll get personal. So on July 4th of 2023, I was fishing in God's country, beautiful Watertown, South Dakota. At the time, I was a director of small business for United Healthcare. I was an officer of the company, and I lived a life and had a career that was beyond anything I'd hoped for. Clear glass day, fish in the boat, music on, cold beer in the cooler, and a rogue wave and a very small goose to the throttle at exactly the wrong time. I lost my balance. I stepped down and back, and I dislocated my left hip, and it popped right back in. So that simple click, I needed a replacement. So in the time that I could get that left hip replacement, my right hip took the brunt of all that work, so I needed that replaced too. Long story short, over the next 2 years, I hit my out-of-pocket max twice. I had 3 other medical procedures. I saw countless PTs and chiros, And then just to sweeten the pot, my role at United Healthcare was eliminated for administrative reasons. So I was no longer on 401k. I got offered Cobra for my medical insurance at the low, low price of $1,800 a month for my family. And I didn't work for 2 years. One rogue wave, one bad step, and my bottom fell out. That's not a disease diagnosis. That's not paraplegia. That's just bad luck and a couple of bad surgeries. So I'm thankful I had my group plan, but if I didn't know about these 3 clauses in my group plan, my story could have been a lot different. And so I don't have slides for my presentation, and I did that on purpose because I really want to focus on 3 things. And if you're going to take notes on this, these are the 3 to hit. When you're dealing with anybody that has a group plan, they're going to tell you they're covered, and they are. The 3 questions you want to know about is, what is the definition of income? What is the ONOC-ENEOC period? And what's the pre-existing conditions clause? And if you didn't get that, I'll cover it again at the end. And I'm going to cover each one of these in a little more detail right now and give you just enough to be dangerous. And if you have questions, you can always come to John or I. But definition of income, know this. Most plans that are covered do not include commission, bonus, or incentive plans in this. So I had sales reps working for me that earned on a W-2 around $100,000 a year. 40 of that was base salary, 60 in commission. They live $100,000 lifestyles. If they went on disability, their benefit payment would have been calculated off of the $40,000 amount, not the 100. So a $100,000 a year job translates to $50 an hour. A $40,000 a year job translates to $20 an hour. Quite different jobs. If you live a $100,000 lifestyle, $40,000 is not going to cover what you've got going on. Commissions, bonus, and incentive payments are typically not covered in group plans. They can be, but are not always. Secondly, the ONOC-ENEOC definitions. So a typical group disability plan has this test. In the own occupation period, and it gets a little thick here, so you don't have to write all this down or understand it, but a typical plan pays for 2 years of the first 2 years of benefits based on the own occupation test. And an own occupation test says this: can you do the job for which you are trained, educated, and reasonably able to do at an income test of 85%? So they're not going to take a highly trained engineer or sales professional or accountant and put them in a job which they are not trained, educated, and reasonably experienced to do. And again, that's at an income test of 85%. After 2 years, most plans will flip to any occupation test. So a lot of gobbledygook there. Let me break it down in a real scenario. Go back to the example of those sales reps making $100,000 in W-2, but they're only covered for 40. 85% of $40,000 is a $17 an hour job. Claims professionals are not in the business of denying claims. Destiny will get to that in a second. She's not there to deny. However, based on that test, the person making $100,000 covered at 40 could be reasonably expected as trained, educated, and reasonably experienced to do a job at $17 an hour. It's a telemarketing job. It's a construction job. It's not the same income. After the ENEOC test, the ONOC test, it's a $12 an hour job. I don't even know if $12 an hour jobs exist anymore. But note this, that test that I just gave you there at 85% and 60% can be dropped as low as 40. It's a ton of numbers. Don't need to know that, but the first test is the job for which you are trained, educated, and reasonably experienced. That's a funky number. I'll go to the third clause now, which is the pre-existing conditions clause. So what a pre-existing conditions clause does is it allows the insurance carrier to look back at any medical advice or test or anything that you're doing to stay healthy or treat a disease or anything in the 3 months prior to the effective date. And if that can be tied to a claim that is submitted in the first 12 months, The claim can be, and I pause for dramatic effect, denied. 0, denied. So 3 months before, 12 months after, and I'm telling you, many of these plans have 6 months prior, 12 months prior, even 24 months prior, and can be extended for as long as 60 months. That is a hammer. Pre-existing conditions clause, and it's one of the tools that I will say less than professional, less than ethical employee benefits professionals will move around because it moves your rate considerably down. It's a hammer. So the clients you're working with today, whether they make 6 figures or not, they have a lifestyle built on that income. And I talked about that bottom falling out. What if there's a car crash, a surgery? I had a friend take a fall in a Walmart in Florida. He didn't work for 9 months because of a concussion. How about a disease diagnosis? During that time, the income that they make is the income they need, and they may not be protected for that amount. And again, I'm going to sit here for a second. Now that I've just trashed DI plans and employee benefits professionals, most of the plans you're going to see do have solid definitions, and claims pros aren't looking to deny. But a fundamental analysis of these points is going to demonstrate your expertise and your care for your clients. I want to wrap up with 2 things. Disability insurance saved my life, flat out. I didn't touch my savings. I kept my son in college. I had medical coverage. I could go seek additional coverages and rehab my body. And I'm back to work now full time. And in a very personal commercial, I'm a hell of an annuity sales rep. You ought to call me on that. We could work on some things. And past that, all the good things that I talked about right there, there's still more, because I layered an individual disability on top of mine that does a whole heck of a lot of other things that have really put me in a strong position to get my life back from that stupid wave and my brother hitting the gas. So thanks for letting me share my story with you. I am incredibly passionate about this, and I just want to make sure that that people are covered. And I think these are great ways to introduce yourself to clients in a whole new way. So John, with that, I'm going to go on mute, turn it back to you, and you can have Destiny go from there. All right.
Appreciate it, Chad. Yeah, I appreciate you sharing that story. It's I know when we first started, and Destiny, I'll give you control here. Um, when we first started working together, you told me your story, and I had a pretty extensive DI background, and I just remember meeting with clients out in the field, and they're like, "Why have I never heard of a product like this?" Right, on the individual side, and it didn't matter if they were making 6 figures or if they're making $50,000 a year as a teacher. Pointing out the differences between group plans and that, the gap there, then how we can close that gap with stacking on an individual plan. And that's what Destiny and Principal are here for. So I'll hand it over to you here, Destiny. Appreciate you joining us.
Thanks so much, John. And Chad, thank you for sharing your story. And thanks for having me today. So I'm just going to go through first why to choose to work with Principal for your disability solutions. And then I'll go into our disability products and then also a way that you can help your clients protect their future income as well in the event of a disability. So first, I'm going to touch here on our team. So our team here, I'm the internal wholesaler that works with IMOs and BGAs located in the Midwest territory. Another part of my team is Corey Cox, who is my external wholesaler, and then Josh Craig, who is our regional wholesaler. So a little bit of a hybrid role there. Corey can help with any advanced education, training, case consulting, joint calls with clients. Josh really his focus is on financial professional development, training, education, and sharing our story. And then my role is working with people like John, where I'm assisting with training and education, technology tools, resources, helping advisors with applications submitted, and then making sure that we get every single case to the finish line, across that finish line put into place. Another reason to choose Principal is access to our underwriters and our advanced solutions team. So we have an entire team to support you guys, not just us here. Um, Education, the information that we share and our contracts are in an easy to understand language. So we are not trying to put contractual language in front of your clients that is confusing to both you and to your clients. And then we also offer access to target market and prospecting support to help you start your conversation with clients and just the ease of doing business with us. So we have tools and resources to help streamline not only our sales process, but training and development from our internal wholesaling team as well. And so our team here, we work with individual underwritten life and disability cases. Um, we're going to start here with just some information about disability. So Chad, thank you again for sharing your story. I am very passionate about disability insurance. I started my career here at Principal in our group and IDI claims department, actually being a claim adjuster, working on those. And I saw firsthand what these policies do, not only for your clients, but how impactful that income coming in is during the hardest time of their life. A big objection that we hear a lot is that it's never going to happen to me. And bringing up the DI story, it can be tough. Nobody wants to talk about, having something detrimental happen to them that makes you unable to earn an income. Disability income, it's not like, an annuity where something is going to, pay out during retirement. It's the potential of it. And it's not something that's fun or sexy to talk about, but the truth is that 1 in 4 of today's 20-year-olds will become disabled before they retire. I'm not a huge betting person. I'm not even sure how many are on this call right now, but 25% is a pretty scary statistic. You can see on the left, there are just a couple of other stats about disability. 51% of consumers would pull from their personal savings, and 26 would actually withdraw from their retirement accounts. So we do have solutions that can help that. When the unexpected happens, we are here for your clients. So, a huge thing that people think about when you think about disability is you think about injuries. You get hit by a car, you fall off a cliff, you end up fracturing your hip. But the truth is that 96% of disabilities that cause someone to be unable to earn an income are because of illnesses like cancer rather than injuries. A quick highlight on our claims team here. I cannot sing enough praises for them and the work that they do for our clients. They consistently receive a 98% satisfaction scores. And in 2021, we paid out $163.7 million in claims that year. As advisors, you guys are already working on legacy planning, future planning, and protection. But let's start with the foundation of it all. And I truly believe that the foundation to it all is disability insurance. A 35-year-old earning $75,000 a year could expect to earn a total of $5 million from age 35 to 65. Now, all too often I hear from advisors is that their clients' group long-term disability is enough. It would be $6,000 a month, or we need $4,000 because that's their monthly expenses. But if disability does happen, not only is a client's income decreasing, but the expenses are increasing. We just heard Chad talk about his COBRA costs. Uh, it costs upward of $1,000 a month just for an individual person. And if you are not continuing to stay on an employer's benefits at that time, that will add up and you will have to find a way for health insurance. The added medical bills from new appointments, your client needs to protect their total income, not just their current expenses. So here at Principal, we have a comprehensive offering. So we offer more than just income protection. We have a whole suite of solutions to help both individual and business needs. Today, I'm just going to touch on the personal income protection and then the retirement savings, as well as a little bit on multi-life offerings and how you can position that for referral sources. Let's start with the bottom line here, the cost. DI premiums typically cost 1 to 3% of their gross income for a benefit that replaces a portion of their lost income. Our solutions are customized to meet the client's budget and needs. And like I said, sometimes we have discounts available. I hate getting into the underwriting nitty gritty. So I'm not going to hit on every single box here. But the big things to take away are our issue ages. So 18 to 60 years old for a single life and then 18 to 64 for a multi-life. Our sweet spot is those 30 to 45, 50-year-old professionals, CPAs, lawyers, executives, desk jobs, salespeople. The medical market is huge, dental. The other big thing to hit on here is that we have the ability to help them protect their income until age 70. And based on the factors here, so based on what they're making before and their occupational class, we could actually issue them $35,000 a month in a benefit. I said that we have ways to make it more affordable for your client depending on what riders. So we have a couple of no-cost riders that I really want to hit on here. The maximize your benefit and then the annual increase rider. So those allow your client to get additional monthly benefit for disability as their income increases without any evidence of insurability required. So if you have a client that's 30 right now, by 40, they would expect to be making quite a bit more money. We actually have a way for them to add that additional benefit without having to prove that they're healthy at that time. Some of our for-cost riders are listed on the right side. A couple that I really want to highlight are the residual rider, which allows your client to actually collect benefits while working part-time, and then the catastrophic disability benefit. It's essentially a long-term care rider. It offers an additional benefit if you become ADL disabled or cognitively disabled. I know that Chad had mentioned the ONOC versus ENIOC. So our product that is out on the market right now that we're talking about is 100% own occupation. So it never turns to an ENIOC clause. It says that if you can't do your occupation that you were doing right before disability, you are able to collect benefits. And then for some of those more specialty markets, we also offer the true own occupation rider, which actually would allow them to continue to collect their full benefit while working in another occupation. I mentioned discounts before. So we offer quite a few discounts. The big ones are affiliation discounts. We have association discounts with various different associations and also a multi-life discount. The multi-life discount is a great way for not only your clients to save money, but for you guys to get referrals as well. If you have 3 or more lives that are W-2 from a common employer, they can actually all save 20% on their policy. So what does that show? That shows that for a 25-year-old sample here, $1,000 a month would be a $16 a month premium for them. There's no formal employer involvement required. So another way that you can target this is actually by talking to some small to medium-sized businesses and see if they do have some earners that maybe need to supplement group long-term or individual coverage on top of group long-term disability. Group long-term disability is a great start. 60% sounds great, and most think that it's sufficient. But when you actually take taxes into consideration on a long-term disability plan, you're actually looking at less than 50% of your pre-disability earnings. In this example here, it comes in at 42% for someone making $10,000 a month. We have the ability to actually stack with group long-term disability to get your client closer to that pre-disability income. So in this scenario here, we were able to stack on a $2,500 monthly benefit to get them to 67% of their pre-disability earnings, which put them right in line to what their monthly income was after taxes before. Another thing to note is that group long-term disability can be reverse discriminating against those higher income employees. So if you look at the example on the screen here, 60% to 10 grand cap is actually only replacing 34% for the CEO and for, the vice president there. But when we add in an individual disability plan, we are able to get everybody to 75% across the board. I know what you are all thinking, but what about retirement savings? A huge stat that I mentioned earlier is that 26% of people would pull from their retirement savings if they were disabled. Chad and I had talked when putting this together, and he really emphasized that without an IDI policy, that is the route that could have been taken. You have a family, you have a mortgage, you have a kid in college. We actually have the ability to not only protect your client's current income that they are making, but also a way to help them ensure their future income with retirement savings. Our DI retirement security it goes hand in hand with our individual disability product, and it is essentially that if you were to become disabled, oh, sorry guys, monthly benefits are paid into an irrevocable trust set up by the client, and then those funds are then invested to become monthly retirement benefits at retirement. The other awesome thing about this is that we offer different investment options that the client can choose based on their risk tolerance, including trust, annuity, and mutual funds. A couple quick little tidbits here on the DI retirement security product. I don't want to get into the underwriting here, and I don't want to get into the reads with it, but I want to highlight on how we can couple this with a disability policy and have a matching benefit period. So we could set them both up to pay to age 65, where the disability is paying them every month to recoup their income. And then we can pay up to $5,100 a month into that trust to replace retirement income in the future. And many times in claims, I saw firsthand the impact that income protection has on a client's life during the toughest times that they will go through. The conversation starts with the advisor. It is very rare that a client comes to you and says, "Hey, I want to get disability," unless they are hearing it from someone else. So I hope that this all helps you guys begin to start the conversation around income protection. Thank you so much for having me.
Thank you, Destiny. Appreciate that. I did have, can you go back to that underwriting, that last slide, please?
Yeah. Um, there we go.
So that minimum annual income on their W-2, they got to be making 76 to be able to add this additional policy or rider,
Yep.
whatever we want to call it. Okay, all right, that makes sense. So once again, not, I mean, that's not a super high number. So that's something that we should probably, advisors should be thinking about. One, if anybody's making over 76,000, we need to be talking about them, about DI, individual DI plans, and then off having the conversation around the this additional policy that we can add on to that. So I appreciate the information there. Yeah, Principal is my go-to always, especially in that target market that you guys are looking for, the medical professionals, anybody and I think we've talked about this, Dustin, anybody over 6 figures of income is your guys' sweet spot. Not that you can't work with, we'll call it middle America, or kind of everyday employees, but that's really your guys' sweet spot. So anybody that I get approached with that's a high income earner, you guys always win out on any quotes that I'm running. The true ONOC is obviously a huge benefit then too, and the pricing comes in right, if not better than everywhere else that's out there in the marketplace. So Principal is where you guys need to be looking for your individual DI. If you guys have any cases that you're currently working on or want to approach some marketing strategies to either get in front of groups to take advantage of that group program or anything DI related, don't hesitate to reach out to myself here, any of the life insurance sales director, and obviously Chad will be able to help out there too. So I don't see any questions here in the chat. If anybody has anything, we'll be reaching out here probably either today or tomorrow to everybody that attended. So appreciate everybody's time. Once again, thanks Destiny, thanks Chad for joining us, and we'll chat with everybody soon.
Thank you guys for having me.
Thanks all.